2024 WISH webinar. We'd like to remind those who have joined us today that this webinar is intended only for bank members and representatives of community organizations. This event is not appropriate for home buyers or the general public. This is our agenda for today. First, we'll provide an introduction to the Federal Home Loan Bank of San Francisco. Then we'll give an overview of the WISH program. We'll then talk about the application process and program participation. Next, we'll discuss income eligibility and enrollment. And in this segment, we'll walk through a case study together. After that, we'll discuss the funds reservation process and then loan closing. We'll move on to cover how a member can request a disbursement. Finally, we'll share some helpful reminders and a few upcoming changes. At the end, we'll have some time for Q&A. The Federal Home Loan Bank system was chartered by Congress over 90 years ago during the Great Depression as a funding resource for home mortgage lenders. Today, lending institutions use federal home loan banks to help finance housing and economic development in their local communities. There are 11 federal home loan banks nationwide, and each operates as a private cooperative financial institution. We are a government-sponsored enterprise and are regulated by the Federal Housing Finance Agency, the same regulator of Fannie Mae and Freddie Mac. The Federal Home Loan Bank of San Francisco is a cooperative, and it's owned by member institutions headquartered in our district of Arizona, California, and Nevada. That means our member institutions are our shareholders and also our customers. Our members include commercial banks, saving institutions, credit unions, insurance companies, as well as non-depository community development financial institutions, or CDFIs. While we are a privately held company, we do have a public service mission. And it's because of that public service mission that we provide a variety of products and services to help support and benefit our members and the communities that they serve. This graphic demonstrates the products and services we provide to our members, which include grant programs and credit programs. We offer support for affordable housing through the Affordable Housing Program, or AHP General Fund and AHP Nevada Targeted Fund. We provide home ownership support through the AHP Set-Aside Program, also known as WISH, and other discretionary programs such as the Empowering Black Home Ownership and Middle Income Down Payment Assistance Program. We also have AHEAD, our Economic Development Grant Program, and we provide outreach and program education, such as today's webinar, to help educate and benefit our members and the communities they serve. To learn more information about our programs, please visit our website. We are required by our regulator to allocate 10% of the bank's net earnings each year to fund the Affordable Housing Program. A percentage of the AHP allocation is then used to fund the WISH program. WISH is a matching grant program for home ownership, and the funds are used for down payment and closing cost assistance. Allocations for the WISH program are typically announced in late March each year. Next, I'll give an overview of the WISH program. WISH stands for Workforce Initiative Subsidy for Home Ownership. The WISH program provides matching grants to eligible first-time home buyers. The match is a 4-to-1 match based on home buyer contribution and can be up to the annual maximum FHFA subsidy limit, which is $30,806 in 2024. The figure is up from about $29,000 in the previous year. Note that we strongly recommend our members to round out the subsidy amount requested to $30,000 for operational simplicity. As an example, if a home buyer contributes $7,500, then we can provide a matching grant of up to $30,000. Homebuyer contribution can come from a few different sources. It may be household savings, which include individual development account savings, or family self-sufficiency savings. It can also be gift funds from individuals outside the transaction, or sweat equity in a self-help transaction, such as a Habitat for Humanity sponsored purchase. The value of sweat equity has increased from $15 to $20 per hour starting this program year. Keep in mind that other program grants or credits or concessions from a party of the transaction, such as the seller or the lender, are allowed in the transaction, but they are not considered homebuyer contribution. The homebuyer must be a first-time homebuyer per our bank's definition, which has been adopted from HUD's definition. The next bullet is very important. The WISH program does have an income restriction. It is restricted to households that are earning at or below 80% AMI, or area median income. The homebuyer must also complete a home buying counseling program provided by an experienced organization. Finally, there is a 5-year retention period, and after 5 years, the WISH grant is fully forgiven. Next, let's talk about the application process. Who can apply to the WISH program? Any member of the Federal Home Loan Bank of San Francisco that is in good standing may apply and participate. New this year, the member application period for the annual WISH program cycle starts in late March, and applications will be accepted on a rolling basis from now until March 14th, 2025 at 5 p.m. Pacific Time. Application materials are now available on our website and consist of 3 documents. The first provides detailed program information and application instructions. The second is the program participation form, which is a simple 1-page document that asks for basic information from our members. Finally, there is a direct subsidy agreement, or DSA. The DSA is a legal document. It is a contract between us, the Federal Home Loan Bank of San Francisco, and the member institution. This document was developed by our legal department, and we encourage our member institutions to have their legal department review this contract prior to signing and submitting to us. And also, please note that the direct subsidy agreement must be signed by an authorized signer of the member institution on file with the bank. All application materials must be submitted to the bank electronically via our secure portal. In order to get access to that secure portal, our member institutions must first submit a completed secure portal workspace setup request form for a 2024 workspace. Note that a new secure portal workspace setup request is required even for members who have participated in the past program cycles. Now let's look at the timeline for our 2024 program year. The bank announced the 2024 WISH program allocation on March 29th, and the 2024 program year officially began. Member institutions may apply to participate throughout the program cycle. The member application period will remain open until March 14th, the following year, or 2025. Once approved, member participants may work to enroll eligible homebuyers into the WISH program during the program cycle. As you can see, our program cycle is 1 full year. For any home buyers using the 2024 program funds, escrow must be opened no later than March 31st of 2025. If a home buyer doesn't open escrow until March of 2025, we understand that they may not close on the transaction until April or May. This is still allowable as long as the home buyer has opened escrow prior to the March 31st deadline. We do expect, though, for all home buyers using 2024 funds, escrows would be closed by July 31st, 2025. Here are a couple of screenshots of our website, FHLBSF.com. Our website has a lot of useful information, program details, as well as forms that the members will need to fill out. I'll quickly point out where you can find this information on our website. When you come to our homepage, click on Community Programs, select Grant Programs, and then come to the Wish section. All the information we've talked about is included here. You can also access program forms under Forms and Documents or from the Resources tab. Here you'll find the Wish Program Participation Form and other program documents. Let's move on to the disbursement process. How does disbursement work? Well, there are 5 milestones from enrollment to reimbursement. The first step is enrollment. A participating member identifies and determines a home buyer's income eligibility and then enrolls the home buyer into the WISH program. Some of our member participants work with community partners to identify those home buyers in their local communities. And we have no objection to this, but I do just want to point out that our members, that it is ultimately the members who determines a home buyer's eligibility and enrolls the household into the program, not the nonprofit organization or the housing counseling partners. Next, after the enrolled household or home buyer identify a home to purchase and are in contract or in escrow, the member may then reserve funds for each eligible household. I want to emphasize that members should not reserve funds for a home buyer before confirming income eligibility or before the home buyer is in contract. At loan closing, the member will front the WISH grant to the home buyer in escrow, and only after escrow has closed will the member submit to us a disbursement request. The member will submit a disbursement request by gathering all the required documentation after the household has closed escrow, and then uploading the documents to our bank's secure portal. The final step of this process is reimbursement. Upon receipt of a complete disbursement request from our participating member, we will validate and confirm all eligibility and conditions have been met, and then reimburse the member. We strive to reimburse our members within 30 days from the time we receive the disbursement request. However, depending on the volume of disbursement requests, it may take longer than 30 days. With that, I'll hand it off to Bianca to cover the next segment.
Thank you, Cindy. During this part of the webinar, we're going to cover the income eligibility and enrollment step of the disbursement process. You as a member will be determining income eligibility when enrolling households for the WISH program. So today, we will review some of the essential forms and documentation necessary to determine income eligibility, and we will go through a case study together. Let's start by looking into income eligibility, a crucial aspect of the WISH program. Program and income eligibility must be determined at the time a home buyer is enrolled for the WISH program. From the date a household enrolls into the WISH program, escrow must be opened within 1 year. For example, if a household enrolls on May 1st of 2024, escrow must be open no later than April 30th of 2025. Please note that the enrollment period pertains to the escrow deadline and does not necessarily need to align with the 2024 WISH program year. Now, let's jump into the Household Income Qualification Workbook, or the HIQW. For a household to be eligible for the WISH program, a household's total income must not exceed 80% of the AMI. Remember, income qualification should occur at the time of enrollment. To keep our practices consistent and transparent, we require all of our members to use the HIQW when calculating a household's income. The workbook is linked here and available on our website. As we navigate through the HIQW, you'll notice 4 tabs that are previewed here. We'll briefly explore each tab to give you an idea of the information available to guide you as you work through income qualifying home buyers. Let's start by looking at the Guidelines tab. If you're qualifying a household income for the first time, or if you need a refresher, you should start here. This tab highlights some of our essential policies, and you want to pay particular attention to the WISH line items, as we share this form with the AHP General Fund and the Nevada Targeted Fund programs, which reference rental projects that are not applicable to the WISH program. Additionally, this page lists the sources of income to include or exclude as annual income on the HIQW, so be sure to review this page before you start your calculations. Now, let's direct our attention to the Acceptable Verification tab. Here, you'll find a comprehensive list of all the required verification documents necessary to validate a household's income. For instance, individuals employed full-time must provide either a verification of employment form or 3 recent consecutive pay stubs. As you can see, we also require the most recent federal income tax return, along with all accompanying tax forms, including all schedules, W-2s, 1099s, and any other relevant forms deemed as necessary during your review. The federal tax return is used to verify employment income, any additional income, assets, and also the household's current address at time of enrollment. Remember, we only require the federal tax return, so please do not submit any state returns or worksheets. If you have any questions about what documentation to provide, this tab serves as an excellent resource that is always available to provide guidance. Now, we'll move on to the Instructions tab. Here, you'll find a step-by-step instructions on how to complete each section of the HIQW and how to calculate each source of income. In a few moments, we'll walk through those steps together during our case study. Now, let's look at the Household Income Qualification tab. Here, you'll find the actual Household Income Qualification worksheet. This fillable form features drop-down menus and built-in formulas to streamline the calculation process. The shaded cells on the worksheet are protected, so please do not tamper with them. Please note, once this form is completed, it requires signatures from both the home buyer and the member contact. Now, let's talk about determining the AMI. Before completing the HIQW, we must determine the AMI set by HUD and then compare it to the household's total income. This determination involves 3 key factors. First, we need to identify the location, specifically the MSA or Metropolitan Statistical Area that corresponds to the home buyer's residential address at the time of enrollment. It's important to note that this address used at this point is not the property being purchased. You can determine the household's MSA using the website linked here. The second factor is the number of people in the household. Because income limits vary based on family size, we must know the number of people in the household at the time of enrollment. Finally, we need to make sure that we use the correct year's income limits that are valid at the time of enrollment. Please note that HUD releases new income limits annually, but these updates do not follow a calendar year basis. For example, in 2023, the new income limits were not released until May 15th. and for the current year of 2024, the limits have not been released yet, and we're expecting those to come out this spring. Now, we'll get started with our case study. For our case study, we're going to conduct the income eligibility process for the John Doe household. We will review the AHP Household Income Qualification Workbook and complete the worksheet together. We'll also look at how to determine the HUD AMI limit for the household. In this case study, we will process income eligibility for a household enrolled on January 19th of 2024. Having said that, let's get started with our case study. When navigating to the HUD website linked in a previous slide, you will find an income table similar to what you see here. Because HUD has not yet published the 2024 income limits, we will continue using the 2023 income limits to determine the AMI. First, we need to identify the MSA for the household. Remember, this is based on the enrollment address, and the MSA for the John Doe household is Phoenix, Mesa, Scottsdale of Arizona. The second step is to make sure we're taking into consideration the number of members in the household. Finally, we want to identify the very low income for a household of this size. Please note HUD's definition of very low income is actually 50% of AMI. So we'll use this figure and multiply it by 2 in order to figure out what the 100% AMI is for this area. So here, we take $46,750 times 2, and we will reach $93,500 as the 100% AMI. Now that we've determined the HUD AMI, we can go ahead and plug this figure into our HIQW. So here's our sample HIQW. Let's go through how to complete this worksheet together. I'll point out the areas where you need to enter data in order to complete the form correctly. Let's begin with section 1 and enter the date of enrollment. Keep in mind this is the date the member signs the enrollment form, not the home buyer. Then, you will include the MSA of the household based on the home buyer's enrollment address. And after that, you will plug in the 100% AMI figure that we just determined together. Next, you'll go to section 2 and enter the names of all the household members in the designated name column. When you move on to the next column, you'll see a drop-down menu that allows you to select each household member's relationship to the head of household. You will enter the date of birth for each member, and the age will auto-populate in the next column. And finally, for the last column of section 2, you will enter the last 4 digits of the Social Security number for each household member. Next, we'll move on to section 3. For the income earning assets section, you will enter all the income earning assets that the household has. Note that for any assets that are $5,000 or more, you will need to provide supporting documentation so that we can validate the reported current value and interest rate. If there are no income earning assets to report, you can go ahead and mark the little white box on top. Now, we'll move on to section 4. And this is where we'll conduct the income calculations for the household. As you begin entering income information for each household member, you will note that in the column on the far left-hand side, you can simply plug in the number that corresponds with the household member's name in the table above, and the name will auto-populate in the second column. In the next column, select the type of income from the drop-down menu, and in the following column, you will manually enter the type of documentation you use to verify that income. Now, let's start calculating income for our first household member, John Doe, who receives employment income. We received 3 recent consecutive pay stubs for John. In our case study, we're only going to analyze one of the 3 pay stubs for him. There are a few things we want to identify on all 3 pay stubs. First, we need to correctly identify how frequent the homebuyer receives income. As reported on this pay stub here, John is paid bi-weekly, meaning he receives 26 paychecks in a year. Next, let's look at the different types of income received in this paycheck. especially taking note of any income aside from his regular pay. We can see here that John did receive overtime as well as bonuses. Unless we have verification otherwise, we're going to assume that these types of pay are a normal part of John's income, and we will include them in our annualized calculation. Next, we identify his gross pay in the pay period, and we'll do that for all three of the pay stubs. The gross pay amounts identified will be used for our first calculation to determine his average pay per pay period. For our second calculation, we'll use the year-to-date calculator and his year-to-date gross income as reported on his most recent pay stub. Let's go ahead and plug this information into our HIQW. Since John receives his pay on a bi-weekly basis, we will go to column E and enter in the gross pay for each of the 3 pay periods. If you look at the calculation up at the top, you see that we've plugged in his gross pay received over 3 pay periods and then divided the sum by 3 in order to arrive at his average pay per pay period. After this, we will enter in column H the number of pay periods within the year, and once we've done that, we'll arrive at our first income projection for this household member. Now, we need to perform a second calculation, and we'll use the year-to-date income calculator. In the year-to-date calculator, we need to plug in the start date, end date, and the year-to-date gross. The end date is a pay period end date on the most recent pay stub. As for the start date, we're going to use the date prior to the first date income was received for the year. Unless we have verification otherwise, we're going to assume that John's first date that he worked and received income was January 1st, and therefore we'll plug in December 31st of the prior year here. Please keep in mind that for each source of income, 2 calculation methods are required. For the bank's purpose, we want to be conservative and use the highest income projection for all individuals. So if we compare John's projected income from his average pay per pay period calculation to his projected income in the year-to-date calculator, we determined that the highest income is $40,178.67. And we will leave this figure in section 4. Now, if his W-2 income from the year prior from the same employer is higher than the projections from these 2 methods, then the higher W-2 income from the previous year must be used instead. Remember, for our purposes, we are calculating the most conservative or the highest income projection. Now, let's move on to Jane Doe, who is a self-employed person, and we'll take a look at her income documentation. For anyone who is self-employed, we do require their 2 most recent years' tax returns in order to verify the income. For our case study, we're only going to review one, and we'll just assume that we've seen the other one as well. Let's take a look at Jane's Schedule C tax form. Something to note here is that not all the expenses deducted are considered qualified expenses. When you are processing income qualification for self-employed individuals, please refer to the Instructions tab of the HIQW to verify the unqualified expenses that must be added back to the net income. In this case, the depreciation was deducted, but for our purposes, depreciation is not a qualified expense. So for our calculation, we'll start with the net income reported on line 31. And then add back the unqualified expense, which is depreciation. In this particular example, expenses reported in line 22, 25, and 27A are considered qualified expenses, so there is no need to take further action on these expenses. As you can see, Jane's adjusted net income result is $4,950, and we will apply this to our HIQW. For the first calculation we're performing for Jane's self-employment, we will apply the average of her 2 most recent years' income based on her tax return. Since we're basing this on an annual basis, we'll use column G. If you look at the top of the form, you'll see that we've added the two adjusted incomes of the previous 2 years, and then divided that number by 2 to get the average annual income. Finally, to determine her average annual income over the last 2 years, we'll enter the number of applicable pay periods per year into column H, which is 1. And this gives us a projected income result of $6,000. Again, let's remember that we have to perform a second calculation. For the second calculation of Jane's self-employment, we're going to reference Jane's year-to-date profit and loss statement. Again, remember that not all of the expenses reported here are qualified expenses. For our calculation, let's review the expenses. As you can see, the only unqualified expense here is depreciation. Now, we'll take the net income of $7,300 and add back the unqualified depreciation expense of $1,250 for a result of $8,550. And we'll plug this figure into our HIQW. As displayed here, this information goes into our year-to-date calculator. Jane's 2023 profit and loss statement reports the start date of January 1st, 2023. Remember that we input the day prior to the start date. Therefore, we'll plug in December 31st of the prior year as the start date. The year-to-date calculator yields a higher income projection of $9,317.96 when comparing it to the first calculation method of taking the average income, which yielded $6,000. So in order to apply the most conservative income projection, we're going to plug in the higher projected figure into line 2, replacing the initial figure that we arrived at earlier. Please note, this is something that we will need to acknowledge in the notes section in order to reflect that we have completed the 2 calculations required. Now that we've completed our calculation for Jane, let's get started with the next member of the household, Joanne Smith. For Joanne Smith, we received an award benefit letter from the Social Security Administration. According to the documentation provided, she received the same amount of $935 every month. So, we input the corresponding information to column F for the pay received on a monthly basis. And for column H, we enter 12 to reflect the number of benefit periods throughout the year. Please know that fixed income like Social Security is an exception to our requirement of 2 calculations. Because there is no variation in this type of income, we do not require a second calculation. Having said that, this is the number we'll leave in place for Joanne Smith. Finally, let's look at the last member of the household, Jill Doe. Jill is over 18 years old, so we must also verify her income. For Jill, we received a no income affidavit. As you can see, the form listed and confirmed that she is not receiving any income from a variety of different potential income sources. It is signed and dated within a reasonable time from the date of enrollment. So this verification for her income, or no income, is acceptable. Because there's no income to report, we will only enter 0 income for the income source and 0 income affidavit for income document. The remaining cells for Jill will remain blank as there is no income to calculate. With that, we have completed our income calculation for each member of this household. Now, let's go to section 5 to look at the total household income amount that has been calculated and verify that the household is income qualified. As reported here, this household is indeed eligible at 64.94% AMI. Now, we want to make sure that we take a moment to complete the notes section. This space is there for you to enter any information that would help the bank understand how you performed your calculation. A common example of what to include here is the clarification note of our earlier calculation of Jane's self-employment. Remember, for Jane, the year-to-date calculator yielded a higher result and replace the average 2 years income approach in Section 4. If you have information about any discrepancies that you found during your income qualification process, or about a detail that might not be obvious in the documentation submitted, this note box is where you would share that information. Lastly, I'd like to emphasize that we will not accept this document as completed unless it has been signed by the head of household as well as the member contact. Now, let's take a look at the enrollment. After the member has determined that the household is indeed income eligible, the home buyer may now officially be enrolled into the WISH program. As previously mentioned, the date that the member signs the enrollment form is ultimately what we consider to be the program enrollment date. This date starts the clock for when the home buyer must open escrow to use the WISH funds. In addition, please note that the address listed on the enrollment form must be the address of the residence of the home buyer at the time of enrollment. So let's take a quick look at our enrollment form. This is a simple one-page form. It includes brief instructions at the top that you'll want to make note of. You should also keep in mind that the members should not sign the form before the home buyer. A final point I want to make is that the income documents you use to validate income must be dated within a reasonable period of the time of enrollment. For example, in our case study, the enrollment date that we used was January 19th of 2024. And the last pay stub provided for John was for the pay period ending on December 25th of 2023. The profit and loss statement for Jane was dated through November 30th of 2023. Now, let's talk about the funds reservation process. Funds are reserved on a first-come, first-served basis. Only participating member institutions may reserve funds. A home buyer must be income qualified and enrolled into the WISH program. A home buyer must be in contract, and new this year, the scheduled loan closing must be closed within 60 days. A member can request a funds reservation by sending an email to our WISH portal account. The email should include 5 points listed here: the reservation year, the home buyer's name, the requested subsidy amount, which now has a new maximum of $30,806 per household. But we strongly encourage and recommend that our members submit or round out the subsidy amount to $30,000. The email also needs to have the scheduled loan closing date and the purchase property address. Once we've received and processed the reservation request, the member will receive a funds reserved email confirming the reservation has been made and is valid for 60 days. Note, this is another change that our members will need to comply with. Reservations can be made until the funds in the program year are fully exhausted. Again, in order to make a reservation, the home buyer should be in contract. Finally, we require our members to notify us if escrow is canceled or delayed beyond the reservation expiration date. We'd like to keep record of the most accurate information of our pipeline so that we can make any canceled program funds available to another eligible home buyer. And with that, I'll hand it over to Iris.
Thank you, Bianca. Now, let's take a look at what happens at loan closing. As mentioned earlier, the homebuyer must complete homebuyer counseling in order to receive a WISH grant, and that counseling session must be done prior to loan closing. The homebuyer counseling program should be an experienced organization, and we do require a copy of the certificate of completion to be included in the disbursement request package. Next, we will review the retention mechanism requirements for household receiving a WISH grant. All households that receive a WISH grant are subject to a 5-year retention period. We require our members to submit the promissory note, deed of trust, and rider to deed of trust. We publish templates on our website to make things easier for our members. The promissory note, as well as the rider to deed of trust. Please visit our website to obtain the most current versions of these documents. For the deed of trust, the member must provide their own. The WISH program lien may be in any position, second, third, fourth, and so on. A reminder that the member is the lender on the promissory note and the beneficiary on the deed of trust. Furthermore, I'd like to highlight another retention document available on our website. To support Native American home ownership, we publish the promissory note and retention agreement for tribal land. This document does not require recording with the Bureau of Indian Affairs. Now that we've covered retention documents, let's review our repayment notification requirements. We will continue covering disbursement requests after our review of repayment notification requirements. We have created flowcharts for the repayment notification process to provide our members with a high-level overview of the process steps. We hope these flowcharts will help facilitate completion of the applicable repayment worksheet, which we will share with you on the next slide. We mentioned a 5-year retention period when a household receives a WISH grant. In the event of a sale of property, a refinance, or a foreclosure, notification from our member is absolutely required. While the notification is required, a repayment may or may not be necessary. We perform a 2-method calculation. The lesser of the pro rata calculation versus the net proceeds calculation will determine the final repayment due. For this reason, we recommend that the homebuyer retain any documentation concerning any principal paid on any senior mortgage, household investments, or any capital improvements they have made to their home. We publish a notice and repayment workbook on our website, and we'll go over it here. Remember that we require our members to submit notification 10 business days before any scheduled loan closing date. As mentioned, we created flowcharts to give an overview of the repayment process. So where to begin? This flowchart was created to help our members determine which worksheet to use, repayment worksheet or no repayment worksheet. Let's begin at the top of the flowchart at Start. The arrow from Start leads us to a decision box. Is the event a sale? If yes, the arrow directs you to another decision box. Is it a sale to low or moderate income household? If yes, again, the arrow points to the process box stating to use the no repayment worksheet. On that note, let's move to the next slide. The no repayment worksheet flowchart is quite simple, as it shows a specific scenario when the closing disclosure and HUD value limit information is required. Let's begin at Start. The arrow directs you to the first process step, filling in the no repayment worksheet. Follow the arrow to the decision box. Is the event a sale to low or moderate income household? If yes, the arrow directs you to a process box stating that a closing disclosure and a screenshot of the HUD value limit is required as supporting documentation. The arrow then points to the last task, submitting the worksheet and the documentation to the bank 10 business days before the anticipated sale. The repayment worksheet flowchart helps determine what fields should be filled in and what specific supporting documentation is required if applicable. Let's go through one scenario. From Start, the arrow directs you to the process step, which is to fill in the repayment worksheet. Follow the arrow to the decision box. Is the pro rata calculation between $2,250 and $2,750? If yes, the arrow directs you to provide the new closing disclosure. From here, the arrow goes to another decision. Is the pro rata calculation $2,500 or less? If yes, the repayment is not required. The arrow directs you to submit the worksheet to the Wish mailbox and then to another decision box, asking if any amount will be repaid. The answer is no, and that ends the process. I know a lot is happening here, but you can visit our website to take a closer look at this diagram and other flowcharts. There are 4 scenarios when the repayment is not required. 1. If the wish-assisted home is resold to another income-eligible household, then no repayment is required. In this scenario, use the no repayment worksheet. There are 2 ways to verify that a new home buyer or the new purchaser is income eligible. The first, the member may use the Homebuyer Income Proxy method. You can visit HUD's website and look up the Home Housing Trust Fund Home Ownership's Value Limits. If the new sales price of the wish-assisted home is less or equal to the value limit, then we will assume the new purchaser is income eligible and no repayment is due. Or the member may also provide us with a new purchaser's income documentation to validate their low income eligibility. Number 2, if the wish lien is subordinated as part of a refinance, no repayment is required. Use the no repayment worksheet to report this scenario. Number 3, in the event of either sale or a refinance, if the repayment amount is going to be $2,500 or less, then no repayment is due. There's a caveat here. The member must use the repayment worksheet and go through the pro rata and net proceeds calculations to determine whether the amount is more or less than $2,500. So please be sure to use the no repayment worksheet first. In the event of foreclosure or deed in lieu of foreclosure or assignment of the FHA mortgage back to HUD or the death of a homeowner on a wish-assisted home, then no repayment is required in any of these scenarios. However, the member must use the no repayment worksheet to notify the bank of the event. Next, I'll review a case study to demonstrate how easy it is to report when a new purchaser is income eligible. In this case study, we have a wish-assisted homebuyer, Larry Doe, who is selling his home in the Phoenix area in Arizona. A member can look up the HUD value limit on HUD's website. Please be sure that the new limits are in effect. HUD published these limits on July 1st, 2023. And until HUD publishes new limits for 2024, we will keep using the 2023 limits. We want to look up the correct MSA or Metropolitan Statistical Area. In this case, we know it's in the city of Phoenix in Maricopa County. The closing disclosure shows that the new sales price is $220,000, which is less than the sales price limit of $371,000. For this reason, under the Homebuyer Income Proxy, the subsequent purchaser is considered low or moderate income, and therefore no repayment is due. The member can then come to our website, use our workbook, and select the no repayment worksheet. Please make sure to visit our website and use our most current version, which was updated on March 29th, 2024. Fill out this information and send it to us. Here's a screenshot of our Notice and Repayment Workbook. Look at the Instructions tab to see which worksheet to use and if supporting documentation is required. We also provide a link to the HUD Home and Housing Trust Fund's website link to determine the value limits. Below the No Repayment worksheet, additional information is provided on what to do in the event of sale. Again, for the Notice and Repayment Workbook, we must receive your notification 10 business days before the scheduled loan closing. From the closing disclosure, please use the disbursement date as the loan closing date. As mentioned earlier, please visit the bank's website for the repayment flowcharts, which will guide you through the process. We mentioned the closing disclosure form during our review of the repayment notification requirements. Now let's cover the closing disclosure form in more detail and move on to how to request a disbursement. We require a copy of the closing disclosure signed by the home buyer. If the closing disclosure is missing critical details about the wish grant, we require a copy of the closing disclosure and the final settlement statement prepared by a title or escrow office. Please send us the most updated version of the closing disclosure. If the final settlement statement is also provided, the closing disclosure should match or closely mirror the items on the final settlement statement. There are a few key items that we look for on this form. The homebuyer contribution must be at least 1/4 of the subsidy requested. The closing cost should be customary and reasonable. The total wish grant should be evident, and there should be no more than $250 in cash back to the homebuyer. This is a regulatory requirement, and we cannot provide exceptions or allow any amount over $250 in cash back. Any excess cash back can be returned to the homebuyer as principal reduction. Let's take a look at a sample closing disclosure form. I'll go straight to page 2 to point a few things out. Page 2, line A, shows the origination charges. We look here to determine if the transaction closing costs are reasonable. Next, on the third page, section L, lines 1 and 2, show deposits of $7,000 and $3,000 from the homebuyer, which shows the homebuyer contribution. On line 6, we see the homebuyer received a grant of $20,000 from the City of Phoenix, and on line 7, the wish grant of $29,000. As stated earlier, the wish grant only matches the homebuyer's contribution, so the City of Phoenix grant could not be considered homebuyer contribution, and the wish grant would not match it. The wish grant could be recorded in third lien position for this transaction behind the first mortgage and the City of Phoenix grant. Finally, at the bottom of the page, you will see the line cash to close from borrower. If the borrower did bring in more funds at closing, this amount would count towards the homebuyer contribution. Note that any amount over $250 in cash to close to borrower is prohibited. Even if the homebuyer brings in more than the minimum required homebuyer contribution, which is more than enough to make the 4-to-1 match ratio, we still do not allow more than $250 in cash back. However, we do allow a principal pay down of the first mortgage if there is excess cash at closing. Under AHP regulations, the excess funds cannot go back to the homebuyer in cash, but you can apply these funds towards a principal pay down. In this example, you can see on line K5, there was $1,000 in excess cash at closing that went back to the homebuyer as a principal reduction rather than any amount in cash to close to borrower. Now, let's review how to request a disbursement. After each household closes escrow, the member institution must collect and submit to us a complete disbursement request. There are important timelines to keep in mind as the member prepares a disbursement request. We must receive a request within 2 months of the homebuyer's loan closing. If there's any deficiency or issue with the documentation, it must be cured within 4 months from the time we receive the disbursement request. Let's look at an example of that timeline. If the homebuyer closes on a home purchase on June 1st, then the member institution must submit a disbursement request to us within 2 months, which would be no later than July 31st. Then the member institution has until November 30th or a 4-month period to cure any deficiencies. Altogether, this is a maximum 6-month time frame between when the member institution fronts the grant funds at loan closing to the time of reimbursement. It's important to note this timeline is a direct recommendation from our regulator. If the member institution does not comply with the time limits, we reserve the right to decline the disbursement request, and the member institution may not be reimbursed. Also keep in mind, we recommend submitting disbursement requests as early as possible so we can reimburse you as quickly as possible. For the disbursement request, the member institution will submit to us a package of documents, and the documents are all listed here on this slide. It's worth mentioning that we have a WISH program disbursement checklist that's available on our website. I encourage you to read through the checklist since it contains a lot of helpful hints for items that are frequently overlooked. We've covered a few of the required forms listed here already in our previous segments. So now I'll go through the remaining forms in the next few slides. The certification and disbursement request form asks the member institution to certify that the disbursement request submitted meets all program requirements. The form must be signed by an authorized signer on file with the Federal Home Loan Bank of San Francisco. And please note that the member signature date should be on or after the loan closing date. Here you can see what the form looks like. We also require the CDR Attachment 1 form. This is an Excel form, and we've just published a new version on our website. Please be sure to use the latest version, as the old version will no longer be accepted. To highlight a few key features of the form, notice there's a progress bar at the top to guide you and tell you when the form is 100% complete. The form must be 100% complete prior to submission. There are also fields provided for explanation for APR and housing expense to income, or HTI ratio benchmark deviation. These two fields must be filled in. Letters or memo attachments will not be accepted. This form is a summary of the transaction details, and we ask you to provide information that is consistent with the backup documentation being provided. Many of these pieces of information are data points that we report to our regulator, so accuracy is really important for reporting purposes. There are a couple of things we want to mention about document submission. Members must submit program documents electronically via the Bank Secure portal. And it's critical to redact all personal identifying information, or PII, on those documents. Please redact only the first 5 digits, but please be sure to leave the last 4 digits of any Social Security numbers and bank account numbers. One final point I want to mention about document submission. On our website, we have a page of instructions to show you how to upload the documents to the Workspace portal. If you have any questions on the process of uploading documents for the application or the disbursement request, we highly encourage you to visit this page prior to submission. Please also note that when an email is sent to request a workspace to submit your application or set up a homebuyer folder, we do our best to respond within 24 to 48 hours. But please note, this is not an automated system. We must review and respond to each email request individually. So we appreciate your patience during peak times, such as now during the start of the program year. Now, I'll turn it over to Cindy, who will review helpful reminders.
Thank you, Amparo. All right, we're in the final stretch of the presentation, and I'm going to go over some helpful reminders. First up, funds reservation. Funds reservation is on a first-come, first-served basis. Each reservation is valid for 60 days. I want to emphasize again that household must be income qualified, enrolled, and in contract before the member should reserve funds. The disbursement request must be received by us within 2 months after loan closing. We encourage our members to send us the disbursement request as soon as they can, within a couple of weeks or even days after loan closing. Remember, the sooner the disbursement request is submitted, the sooner we can review and the sooner we can reimburse the member. A reminder that all household members listed on the HIQW must be validated. Generally, dependents and other household members reported on the head of household's income tax return can be validated using the tax return. However, if household members are not listed on the tax return, we will require separate third-party validation. Income qualification must be performed for all adult household members who are age 18 or over. Income eligibility is based on the address of the household at the time they are enrolled into the WISH program, not the purchase property address. Also, we want to remind our members to always use 2 methods to calculate income projections. And for employment income, the prior year's W-2 gross earnings must also be considered. It is important to review the prior year's tax return and reconcile any discrepancies on the income document. And the income on the W-2 that is submitted to us must match the income that is stated on the tax return. HTI ratio. Whenever the HTI ratio is over our benchmark of 35%, a satisfactory explanation as to how the mortgage is affordable is required. We want to ensure the mortgage is affordable and home ownership is sustainable to the home buyer. A satisfactory explanation is different for each home buyer transaction. Past satisfactory explanations include additional savings or reserves, little to no debt outside of the mortgage, or the presence of other household income source that was not included in the mortgage loan qualification process. Cashback. Remember, per AHB regulation, cashback to the home buyer must not exceed $250. This includes any consumer debt payoff, and if any consumer debt payoff is evident, there must be enough additional cash in the transaction to cover both the consumer debt payoff and the minimum required home buyer contribution for the WISH grant. Reminder that any excess funds can be returned to a home buyer in the form of a principal reduction. Sweat equity. Sweat equity is now valued at $20 per hour, up from $15 from last year. Retention documents. Reminder that the member must provide their own deed of trust. And we do provide a template for the promissory note and the rider to the deed of trust. The member is the beneficiary on the deed of trust and the lien holder. And if repayment in the event of a sale or refinance within that 5-year retention period is $2,500 or less, then no repayment is required. Now I'll hand it over to Noelle to share some upcoming changes.
Thanks, Cindy. I want to spend a quick minute sharing some exciting upcoming changes to the WISH program. The bank is currently developing a web-based portal to streamline the process for members to participate in the WISH program. The portal will be designed to enable members to easily complete forms and view and submit requests, and it will act as a centralized communication hub or one-stop shop with the bank. This will ultimately replace the need for emailing WISH portal and using the existing secure portal. We expect this new portal will ultimately make it easier for members to participate in WISH, but we understand that there will be some upfront work for members to familiarize themselves with it. Stay tuned, more information will be announced soon.